Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap. It is Thursday. It is the 28th of March. Another just back and forth day in the market as we're really seeing the bulls and the bears duke this one out. And no winner is decided just yet, I don't think. And good afternoon to you, Marcelo. Good afternoon. Always great to see the captain, the GOAT, both the captain GOAT. Great to see you as well. Hope you all had a great day, both in and out of the market. Just another one of those, fist fights in the market right now. Today, we closed in the green officially, whereas yesterday had that same fight closing in the red. For the most part, most areas were able to hold gains here today. You did see some selling over in the utility sector as some profit taking looks to be coming out of that. Maybe we'll have to see where this one takes us, but maybe opening up the door for some bullish retracements in that sector some point next week. You saw some of the communication services stocks kind of not getting on track. Verizon, both down. Verizon down pretty good on the day. Google, Facebook, not really getting in on the action either. But for the most part, we did see more faith from the bulls here today. I don't think we know where we're going with this one just yet. I still lean bullish because we haven't broke support. And hey, Lloyd, good to see you, my friend. Here we are, 15 minutes on the S&P 500. Here's our opening candle. We get a little bit of a run to start the day, and then it immediately starts selling off. And is it one of those days? Oh, not so fast, my friends. Then we rally up the rest of the day. Not really getting too far, but just once again illustrating the battle that really we've seen developing and playing out all week long. Interesting development, maybe. I think it's interesting, at least on the hourly chart in the S&P 500. We're starting to develop the hourly 50 moving average acting as our resistance zone, which is falling currently, and our rising 200 hourly moving average acting as our support zone, developing into what could potentially turn into a pinch a few days from now if we continue to trade back and forth between those two averages. We will have to see, but I do think we have a pretty good idea that we want to hold this area at around 2780 as our support level. Up on the top end, we're just north of 28 and a quarter. We'll call it 2830 to give it an even number, but the top of our zone, and we're just going to have to let this one play out. So there will be a winner eventually. I'm hoping there's not one tomorrow. I hope when we're having our conversation tomorrow, we are still somewhere in between this rising 200 hourly and this falling 50 hourly. We will see if that is what we get. So looking at the daily chart, really not a lot to say here that we haven't said pretty much, all week long. We continue to hold support. The buyers are just still a little uneasy, but the bears are just not able to take over. As long as the support level holds, I will continue to be more bullish than bearish, for better or worse. We haven't even taken out a short-term level of support just yet. So it'll be interesting. Hopefully, again, I always prefer, if we're going to have something big happen, I'd rather it not happen on a Friday. I don't think it's too much to ask. I just shouldn't expect it, right? So beyond, this little short-term range that we've developed, I think if we can push through this, we really do probably not have too hard of a time testing these old highs up at 2860. We've got to get through this, and that's turning out to be a battle. But I think if we can take that out, a run back into that swing resistance is probably not asking too terribly much. So pretty flat closed here. Very similar over on the NASDAQ, a little bit of a doji candle as much of the price action in the NASDAQ mimics very closely what's going on in the S&P 500, still above that rising 20. Hard to be bearish in my mind on a chart that looks like this, even though it's not pretty and it's not there in my opinion yet. It still looks more like a bullish retracement than anything else. And above 72, I'm going to probably continue to feel that way, at least with the way that we look right now. So again, hopefully a flat day tomorrow and some movement early next week. That would be all right with me over in the NASDAQ. Over in the Dow, continues to kind of be stuck in that range within a range, right? Where it kind of looks like maybe a pullback in the NASDAQ and the S&P. We're kind of stuck kind of in the middle of this current range in the Dow Jones right now. I think it is, for me, continues to be my third ranked index, if you will. I do like the NASDAQ best still, followed by the S&P, then the Dow Jones. We're really in this battle. The 26 is where I've got resistance, of course, support down at 25.2. If we see bullish movement, I'm going to prefer S&P and the NASDAQ. And that's really been true all week, and nothing I see today really changes my opinion on that. We still have a big overhead on top of the Dow. We weren't able to take out that big resistance zone where we were, at least briefly, on the S&P, on the NASDAQ. Dow still not quite there just yet. And the Russell getting in on the bullish action today, finally able to close back above that 50-period moving average. I still am very cautious or concerned, or at least more concerned with the rut than any other index from a bullish point of view. I still have to wonder if this is a bearish retracement. We have made those lower highs and lower lows. Certainly no signals, in my opinion, today, and certainly not after a day like today, but we've got these falling averages after putting in lower lows. I don't like when I see that. The rut continues to be my least favorite bullish index personally, and probably if we see selling will probably be my favorite bearish. I don't think we're there just yet. And if we can kind of turn these moving averages, get back above these shorter term averages, have that 9 start running back up, I'll probably be a lot more neutral. And I still am more neutral than bearish personally on the rut, but I definitely have it as the weakest right now with the price action that we have been seeing as of late. So, a nice day of fighting in the market. For me, I don't think we can call a winner yet, one way or the other. Hopefully we do get one soon, but I wouldn't mind that being next week instead of Friday. We didn't just see a boring day, though. We actually had some areas moving. Materials we've watched all week long as it's tested and held that support zone over and over and over and over. And today, buyers were willing to say, we finally trust it, right? It's been holding. Sellers have not been able to push the materials ETF through that support level. For whatever reason, the third day or fourth, if you want to call the low from last Friday, was a charm. Nice upward movement within the sector here today. Still well within this trading range. I don't think a lot has changed for us as far as support. I think we have a really good idea that this around 54, this low, is our support zone. The highs up here just north of 56, around 56.20 or 25 are our resistance. Has not made that lower low, so it's kind of bullish with a side of neutral, or neutral with a side of bullish, whatever you prefer within it. But right now I'm comfortable saying it is still within this range. Having not broke support, my rules are pretty clear there. You always have to be more bullish than bearish if you're not breaking some support. I do think we've had even more reason today, though, to believe that this support zone is maybe even more important than we thought with the movement off of it. We've seen folks buying off of it, but not really a lot of movement until today. Very clean candle, up almost 1% on a pretty back and forth flat type of a trading day. I do think you have to appreciate, and that does go to show us all. I mean, we talk about it a lot. Support and resistance shouldn't be easy to break, right? Sometimes we want them to be. Sometimes we even think they're going to be, but they're supposed to put up a fight. And so far, that's what we're seeing really this week in the market as a whole. Over in energy continues to be rangy within this same old 65 to 67 range. You did see a few things like Pioneer did break out today. They were kind of knocking on the door. I think we might have peeked at them, although I can't remember. Maybe it was in the halftime report. They were knocking on that door here yesterday, really came through pretty good volume today too, as they took out that resistance level. Not a lot of overhead on them either. This is what I want to see the sector do. I want the sector to take out that resistance level and have a little bit of room to run. So we will see. It's only one day on PXD, and we haven't been able to do that in the energy sector, at least as of yet. We did try Thursday, but right or wrong, better or worse, we're back in this range right now. Some of the refiners were down, whereas a lot of the producers were actually up here today. Overall, we still find ourselves in that range. Over in financials, we are now working back into that old support level. That should be a challenge point, in my mind at least, as a resistance level. You're seeing a lot of the banks and the regional banks in particular. We've talked a lot about banks and regional banks. They're kind of retracing into their falling 9 EMA right now. those banks, particularly the regional banks, really continue to look like bearish retracements to me. Maybe not confirmed just yet, but that's what that chart looks like to me. A lot of the bigger banks aren't quite as beat up, but many of them do have similar type of patterns. They continue to concern me. If I am looking bullish, if we do push through this resistance level, here we do have overhead at the 50/20 that we're going to probably have to deal with. I'm very skeptical, cautious, whatever you want to call it, with the banking stocks right now. I can't imagine that they're going to appeal to me from a bullish point of view. I am interested maybe in a bearish retracement at some point next week within that side of the financial sector. Other things like American Express, some of the insurance companies, I'm still open, especially if we're kind of in the upward swing in the ETF, to bullish trades in that area. But banks are really kind of on the bear or go home list, and I'm perfectly fine going home. But we are in a battle zone right now, and we are seeing a little bit of conflicting information in the different industries within the financials right now, in my mind. Over in industrials, much like, maybe not to quite the same extent, but much like the materials, been dancing around support all week long, and finally today we're able to get a little bit of follow through, closing positively here. Pretty decent looking candle. I don't think as strong as our materials candle was, but pretty good candle. For me, I am looking more, neutral until we break this resistance at 75. I am a little concerned, not tremendously concerned, but I'm going to feel a lot better on the industrials if we can take out resistance. And so I don't really think I'm there just yet. I'd have a much easier time wanting to come into materials off of support than industrials off of support right now, personally. Whether or not that's a good idea or not, I guess time will tell. But I do prefer the sideways nature that we're seeing in the materials to the, we're sideways, but we did kind of fail this pullback, at least as of yet. Haven't broke support, not really bearish, but a little more neutral personally within the industrial sector. So services are going to be kind of like your retail, your Walmart, things like that. We'll take a look at some of the names here, some of the big names in that sector, Marcelo, in just a moment when we get to that area. But yeah, it's basically discretionary, basically is where you're going to look. So on the FinViz, it's calling it services. Over in the sector spiders or the GICs that kind of organize everything, they're going to be the discretionary stocks. So tech not really getting in on things today. Nothing wrong. Much like the NASDAQ was not really cooking one way or the other. Still, I feel like it looks more like an ugly bullish retracement than anything else right now. And I'll probably continue to feel that way above $72. So right or wrong, I still think that tech has an interesting way that it could develop into some interesting buying opportunities going into now next week. Just don't jump up to $75 tomorrow, because I don't think I could trigger in if it wants to take off like that. Above 72, though, is still my line in the sand. And as long as we're holding that, I am still looking at this sector from a bullish retracement perspective. Just another decent day over in the staples sector. You had Church and Dwight. I think they had hit a new high here today. CHD is their ticker symbol. We can just take a quick peek at them. Really taking out some resistance. They took it out yesterday and then got the ball rolling really heavily here this morning. So this sector continues to be pretty strong. While this maybe is one of the better lookers of the day, the sector overall, after that recent break that we watched for, we talked about a lot. I was wimpy as usual, making sure I was sold that it was broke. But ever since we've had that clean break, traders continue to be pretty comfortable, it seems, buying into this sector as a whole. I continue to like it. I feel, honestly, and while I don't necessarily feel like it has to do it in one swing, although I wouldn't mind it, if I feel there's really not a lot of resistance until we get into this 5650 zone on the ETF. I do feel like there is room to the upside still overall within this sector. And as long as we hold this break, a pullback would be fine if that's what we need to see. It's hard to go straight up. We see it happen. I just don't think we should expect it. But I don't really see a lot of overhead resistance until we get into that 5650 to 57 range. We do have some price history over there in that ballpark for sure. Over on utilities, pretty heavy selling back into that rising 20-day moving average here today. The price is interesting. How we got to this price, not so much. If we simmer down tomorrow, maybe into Monday, and we may have a little doji party, get a little hammer candle, small inside candle, something like that, I could see this being an interesting pullback opportunity within the sector. I don't feel we've seen anything other than short-term sell signals. It looks a lot more like a steep pullback. I don't really love the increased volume. I don't like the violence, basically the free fall that we saw. I like when my retracements are a little more gradual, like probably most traders. So not here yet, and who knows, if we continue to sell, 57 should be the support zone. If that falters, and I don't expect it to, but doesn't mean it won't, that would be a little bit of a concern for me right now. Pretty heavy selling. Can't see a scenario where I'm excited about utilities tomorrow personally. If we simmer down here, though, I could see a scenario where it could be opening up the door for some interesting pullbacks for us if we are interested in this sector. Certainly, it's been very strong. I'm not going to bet against it on a 2-day pullback, even though I don't love the way the pullback happened today. I don't have to buy it tomorrow, and I'm not anywhere near turning on it just yet. So closing right at that 20-day moving average. Tough one for tomorrow, I think. At least for me. I'm cowardly. I need to see at least one more candle at the bare minimum. Over in healthcare, this continues to be just a battle back and forth. We didn't really get anywhere here today. We all know how different the charts within this sector look right now. Let's pop into the healthcare sector. Some of the top holdings within the sector. You have Johnson & Johnson knocking on the door of a breakout. I'm very interested in this as a potential breakout candidate. You have United Health that just had its kiss goodbye and is working back down into support. A lot uglier of a chart. Then you have things like Pfizer that are basically in what I would consider no man's land. It's clear level of resistance up top, support at the bottom at the 200, and we're basically hanging out in the middle, going nowhere. You've got strong trending stocks like a Merck, like Lilly, doing really well. You have AbbVie that's hanging on to a major level of support, bumping its nose into its 50-day moving average. You have Amgen that is just not looking all that pretty to me. So, this continues to be even more than maybe any other sector. Some look very intriguing from a bullish point of view. Some look very intriguing from a bearish point of view. And some of them, like a Pfizer, just look like flip a coin. It could go either way, at least to me. So I'm going to continue to treat this sector the same way I have been really for the last several weeks since those healthcare plans really started to sell off. Case by case basis, open on either side of things. Not going to really count on the strength or the weakness of the sector as a whole to be my guide, if that makes any sense. And again, probably going to continue until we see some sort of clarity in there. It really is probably the primary sector right now that I feel, depending on the ticker symbol, as really pretty as a bull or really pretty as a bear. So over in discretionary, again, Marcelo, these are going to be our services stock. So these are places where you're going to go get a coffee, like Starbucks, places where you're going to go buy some home improvement equipment or yard stuff at Lowe's, TJ Maxx or Target, General Motors, our booking where we're, planning those trips this summer. Our McDonald's, which is a nice little broke out of resistance here, depending on maybe your definition, maybe earlier in the week, maybe here today, continues to be an area I'm very intrigued by personally. As of course you guys know, I was watching for that break of that 112 kind of as a continuation signal. Whoops, wrong one there. And I still do like this area quite a bit. We do have a pretty decent idea that our swing low from back on Friday is maybe a bit of on Monday, a little bit of a support zone for us. I wouldn't call a break of that support bearish necessarily, but I will call that my short-term support zone. We have seen some upward movement off of that Monday low, much like other areas in the market. Still, we have a little swing resistance up here just north of 114, but our next significant, at least in my mind, level of resistance is closer to 115 at these old lows. So I do think we should watch 114 as a potential resistance zone, but for the most part, I'm looking at it just kind of doing due diligence. I don't expect it to be a strong level of resistance. That doesn't mean it won't be. I'll prepare for it, so I'm not surprised But within this sector, I guess we kind of flew through those a little faster than maybe we should have. We saw that McDonald's, break to the upside. Nike's a little concerning because of kind of where it is. Doji at that old support level, broke down on earnings. Definitely not a pretty looking chart. Booking kind of whatever. I don't even know what to say about Booking. Starbucks broke out early in the week, just another continuation. You're seeing some pretty decent movement in Lowe's, in the Home Depot. You saw Target, TJ Maxx doing a little bit of breaking out here today as well. So an interesting area in my mind, at least as we work into, at this point in time, we only have 1 day left this week. So, interesting as we work into next week. Over in real estate, while utilities definitely had some profit taking here today, that did not move over into one of our other defensive sectors. Real estate just, pushing into new highs kind of across the board yet again, continues to be very strong. Much like utilities, I mean, I'm not really ever expecting a fast pullback. I'm never surprised, but I always kind of want things to behave, if that makes sense. We are extended to the upside, but really showing no signs of weakness, in my opinion, at least. As you guys know, so many of the companies within this sector are hitting new highs, new 52-week highs, new all-time highs on their own pretty regularly. So just another day at the office over in the real estate sector. And communication services having a hard time. They're holding support. We didn't really get moving on Google and Facebook today. Facebook continues to find itself within that same kind of general trading range, somewhere between support and resistance right now. Not really doing anything notable, which is fine. Google had that pretty steep retracement going on. A little bit of a hammer candlestick here today. I don't love the way the chart looks because we took out that swing support level. I don't like this as a potential pullback candidate myself. That doesn't mean I'm right, but that does concern me. So a little bit of weakness there. Saw a lot of selling over in Verizon. I don't even know what the news was. I did a quick, peek to see if there was anything that jumped out, and it really didn't find anything with at least a cursory glance, but quite a bit of selling after a very nice run. So it continues to, fight over in the sector as a whole. I don't love the sector. Everybody knows that. But I will respect the support hold. As long as we hold the support level, I will continue to show it the respect that it, at least in my opinion, deserves. We will see if that gives out. I probably wouldn't turn. I'd probably look to that 50-period moving averages, that next support level. Much like the industrials or the material sector, if folks are going to buy off the support, I would understand. I wouldn't agree, but I wouldn't be betting against them, I guess, if that makes any sense. Holding support, not loving the way that sector as a whole is looking right now, but you guys know me, I'm usually not. So that sector has not been, very well behaved, in my opinion, for quite some time. So, just another battle. We saw a few more, interesting things developing. You are seeing some things that look okay. So it's not like everything's doing nothing, right? Just the overall, the market is really battling it out in this little trading range. Is the trend is still intact. Trend traders like myself, at least, are looking at it from that point of view. There's a little more negative press going on out there, and it may be scaring some folks off, but still just another day of battling over in the broad market. The dollar, not so much. They just continue to push up as they've been very well behaved. The last several support bounces, actually, 3 support bounces in a row, basically just kind of going up, get to resistance and go down, 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 down. We'll have to see if that happens here again, cleanly taking out that 97 here today. And while it's probably more psychological, or certainly an area than a specific number right now, I will say that I would call that a little bit of a bullish signal. And that is true, Captain. We'll see where that one goes. We got a lot of overhead, on the dollar. So the big test in my mind is going to be this 97.60, 97.65. This is as high as we've been in quite some time. From a little bit of a different perspective, we really are just pretty sideways within this range. As I've said for, what seems like months now, and it probably actually has been months, a break to the upside I will call a pretty good signal. That is still what I'm looking for. If I'm not in the dollar right now, or if I am in the dollar right now, I've got my eyes on that resistance level. And for me, I'm going to treat it as if it's the brick wall that it has been. It's going to have to break it to get me on board. So we got a little bit of room between here and then there at this point in time, but not not a whole lot, right? We're closing in on that resistance level. So yeah, and I don't know, if what happens when the recession does develop. I'm sure eventually it will, and I guess we'll just have a lot more bearish clarity. I was kind of what I would think personally. If when that starts to happen, and this might be the beginning, but it hasn't translated into our charts yet, right? Again, until we break support, how bearish can you be? And maybe not everyone agrees with me. I understand that, but for me, well, that's got to be the first step for it mattering, right? So yeah, but they seem to, news is a weird thing. I try to think more in the here and now and not the long term. Personally, I feel a lot more comfortable at doing that. So over in the metals, a lot of selling in. Exactly. We saw a lot of selling pretty much across the board. Palladium down big, really big, gold down big, silver pushing into that, $15 support level. I'm a little surprised. I'm not shocked. I mean, you guys know that for me, I've been kind of staying away from gold. I don't really think it's been a great trader's instrument as of late, but I didn't really think it was going to free fall, or I would have been a lot more bearish on it. So we do have a pretty significant support level at 1280 or approximately 1280. That's really the line in the sand for me. A break below that, I will definitely call a sell signal, not necessarily where I might be wanting to go in as a bear, but certainly where I'm going to have to start looking at it through bearish eyes. That hasn't happened yet. We may just be in one of these choppy sideways ranges for all I know. Certainly a lot of selling top to bottom here today. If you look at this price action on, say, let's go to a 15-minute chart here. I mean, most of the day it was just drop. We started to flatten out towards the end of the day. I don't dare buy that. That's for sure. So 1280 will be the next level of support. Really, at this point in time, our primary resistance, I do believe, is still at that 1325. That seems like it wasn't that long ago that we were testing that resistance, but not a very well-behaved market right now, in my opinion. That definitely has not changed. A lot of selling in that gold here today. Silver looking a lot less appealing, knocking on the door of that $15 area. There's a lot of history there. Let's go to a weekly chart to help illustrate this. I mean, that was a big double bottom on silver for us, right? Get rid of that. Big double bottom. After a lengthy downward trend, we broke out. We really started to, have a good time in silver, pushing above $16 at one point in time, testing that old breakout point right now. I'm not anywhere on it right now. This is an important fight, though, in my opinion. If this clearly gives out, I will have a bearish look on silver, and I wouldn't expect it to free fall back to $14 necessarily, but I would look at it from a bearish point of view. I'll respect it. I do expect it to put up a fight. In a different world where I have different mindset, I could understand buying it here. I would never do that. And I certainly wouldn't do it on a day like today with the candle looking like it does. But a bet on that support holding is not the worst bet I've ever made. In a different world, maybe that's my style. I could understand how that would be an appealing price. How we got here, yeah, that's not appealing at all. Luckily, I don't do that. So keep an eye on the battle at 15, whatever your personal thoughts are. I think we can probably all agree that we do have some pretty important price history, especially recently at that $15 mark. But a lot of selling in the metals here today. Over in Natty Gas, we did have that intraday break yesterday. We kind of find ourselves just still hanging around the bottom end of that old trading range. For me, nothing really has changed. A break to the downside, and I don't think you could call it that. I certainly wouldn't call it that at this point in time. I could understand the bearish argument, and I wouldn't really have a counter argument other than there's not a lot of room, in my opinion, with two levels of support. One being, in my opinion, very significant at 250, but certainly not a slouch down there at 257 or so either. So I don't really like a bear play. Personally, right or wrong, better or worse, the break to the downside still does not appeal to me. Even if it's a very clear signal, it's not something I'd be interested in. On the other side of things, while we're a ways away, and it may very well never happen, or at least not in any relatively near future, the break to the upside I do think is a lot more appealing of a chart development. not really any clarity in my mind here today. If you are of the school of thought that a break to the downside is a tradable bearish play, I mean, it could happen any day now, right? Anytime we're hanging right at that support level, at least from an ATR perspective, it could do that tomorrow, right? For me, that nothing really has changed there, though. This support level, I feel like we have to respect, and that 250, looking at it from a little longer perspective, I mean, I think you have to respect that. Even if you say, Frank, you're a wimp, 257 is not that much. I don't think you could make the same case at that 250. So maybe what would be interesting, and really my thoughts are the break, and that's what I'm waiting for personally before I want to do anything. If we want to pull back and test that support and then take another run and turn into a W, I'm fine with it. And I'm fine with as long as it takes. I feel that that can develop into a good signal. I just don't think it's going to happen tomorrow. I don't think I'm going to have that decision made one way or another here tomorrow. And over in crude, a little bit of a back and forth day. Once working right back into that support level. If we go into this on a 15-minute time frame, really sold into that. We saw some selling yesterday after the EIA report, working down into that 58.25 ballpark, and then basically today, right? So even though maybe not a great candle here today, certainly a lot of buying off of that support level. Clearly, some traders out there are looking at around 58, just like I am, as a support zone. They were definitely willing to put their money on the line at that general ballpark here today. And at least for today, we're rewarded. I still, at this point in time, if I'm not in crude, I'm waiting for it to break this little top. We looked at that yesterday. That, certainly has turned into a little bit of resistance. Maybe could have potentially turned into a potential cup and handle. I guess you could, if you're really, really lenient in your definition, still maybe could. But looking at that more as a little bit of a break above that 60, well, just north of $60 there in the crude market. If that does break, I do expect there to be a little more room to the upside. A lot, not so much. Not necessarily that I don't think there's a lot, but I will respect that 200-day moving average. Really not a lot has changed for me. Approximately 58 is still support, just north of 60 as our short-term resistance, and has turned into be, something that's causing a little bit of problems with the with crude. Beyond that, the 200-day moving average, I do feel if we can take out those highs, a trip to the 200-day moving average is probably not that difficult to achieve. So, nice to see that buyers were willing to come in at the quote unquote deal today at 58.25 or whatever its low point was. Not terribly surprised. We know that folks have been watching at our 200-day moving averages there as well. If that does falter, I think you can, make a strong case to go back into neutrality. I wouldn't make a case to go bearish on a break below 58, but I would make the case to go into neutrality if that's the way that it wants to play. I expect it to try to break that resistance. Whether it will win or not, or whether I'm completely off base, we'll have to see. But I do expect it to try to take out that resistance. But I don't want to assume that that's just an easy thing to do. It has really developed into some short-term overhead for us, no doubt about that. So, ladies and gentlemen, a little more exciting day in the market. I mean, we really didn't get a lot of clarity, in my opinion, from a broad perspective. We still are, pretty much the same place. The Dow kind of in the same middle that it's been. The rut still, at least for me, not done enough to sell me that it's wanting to get in on the action. NASDAQ still looks more like a pullback, albeit a pretty ugly one at this point in time as far as that goes. S&P developing a nice little range. So I think we're going to at least need one more day to get some clarity one way or the other. I hope very much that we're having a very similar conversation tomorrow. I wouldn't mind that one bit, staying within this range. If it does want to break, I'd rather it go to the upside because that is where my bias is still. So that would make me happier than it breaking to the downside, of course. So we'll see if it wants to listen to anything that I ask here tomorrow. So with that, ladies and gentlemen, that'll do the market recap for today. But as always, thank you so much for joining me. It's always more fun to do this with you guys than on my own. You guys are probably tired of me. You've probably seen way too much of me this week with the halftime report and the market recap. You're probably ready for a Frankcation. And I would understand if you need one. But it's been awesome hanging out with you guys over in the halftime show. Certainly always great hanging out with you in the market recap. So thank you for joining me. We do have the Cash Flow Club here tonight. So all of our pro members, make sure you hop in over there and see what old Tyler's got up his sleeves for you this evening. If you're not a pro member, why don't you give us a 15-day free trial? See what you think. Maybe you'll have a good time. If you are new around here, of course, hit that subscribe button and hit that notification bell so you can be alerted to any new streams or videos that we're adding over here, and follow us over at Tackle Trading on Twitter. You can, of course, as always, find me at FrankMartin23 on Twitter as well. Never feel like you can't say hello. I'm never too far away, as most of you guys know. So if you enjoy the recap, it is always helpful and appreciated if you do give it a thumbs up. So thank you very much for that. And with that, yeah, I had a lot of fun. I really did. I'm feeling my age this week, but the way I see it, Micah, and go ahead, Lloyd. The way I see it is I'm just preparing. Here, somewhere in the summer, the original World of Warcraft is supposed to be coming out. That game has not really been playable for over a decade. They make expansions that change the game. So I've not been able to play the original game for over a decade. That's coming out, or slated to come out, sometime this summer. I know I'm going to be living without a little bit of extra sleep for a while when it does. So this has been great preparation, staying on top of the market and multitasking. So I'm looking at it as training for my video game playing summer. So thanks, guys. And Lloyd, let's see here. So I don't use iVest. That's not to say it's not a useful tool or it isn't worthwhile. So, I can't really speak one way or the other. I don't really use that personally, Lloyd. So I'm not really a great person maybe to ask. What I might suggest is hop over into the clubhouse, talk to some folks who are using it on a regular basis, see what they're thinking about it. Any trading tool that helps us out, I am all for. I don't want to have, too many, so I'm never feeling like I'm getting, I'm always looking at stuff and never doing things, if that makes sense. But I don't have a strong opinion one way or the other. I cannot speak to it. I personally don't use it in my daily routine. So, but maybe pop over to the clubhouse, see, talk to some folks that do. That doesn't mean that you shouldn't or you should, by any stretch of the imagination. So I know maybe not a concrete answer, maybe the wrong guy to ask that question to, Lloyd, but hopefully it gives you something to think about, my friend. All right, ladies and gentlemen, well, hey, I'll let you get the heck out of here. But as always, guys, thank you so much for joining me. I will see you tomorrow for the recap. I think officially Matt is back tomorrow. And he was on a recoup day. He's been out of town for a while, so I was happy to get another day over on the halftime report. I'll probably see you in the chat, if nothing else, in the halftime report. So, hey, thank you guys so much. You guys all have a fantastic Thursday. Enjoy the Cash Flow Club. I'll see you same time and channel here tomorrow afternoon. Thanks, everybody. Have a great evening.